You're listening to The Podcast. For grain merchandisers, by grain merchandisers. Join us in our good-humored attempt to serve as a voice of reason in an industry fraught with misconceptions and half-truths. And now, from deep in America's heartland, this is The Elevator's Cut.
Hello and welcome back to another episode of The Elevator's Cut. I'm one of your hosts, Roger Gaddis.
And I am one of your other hosts, Jason Wheeler. And we are glad to be back once more in the big city of KC.
Doing the thing.
We've been all over. Roger just got back from the southeast, Georgia.
No,
Good time?
Yeah, now southern Georgia.
Oof, okay.
Driving up to northern Georgia.
Okay.
And every place in between.
Is it hot down there yet?
No, not really.
They got everything planted yet?
Mostly, yeah.
Yeah, good.
Yeah. I never too early plant the first time, but the seed salesman told me. Yeah, everybody's trying to figure out where they're going to put all of this corn if it grows this year.
That's right.
The biggest crop ever.
Okay.
If
Good.
it makes, which is a big if.
Yeah.
But it's like people's trying to figure out. They're going to bag stuff down there. They're going to pile on the ground. They're going to put this stuff in chicken houses that have been euthanized because of avian influenza, that it actually works out better this way.
Okay.
Make more money on corn than chicken. So,
Gotcha. So is Georgia? Are they? Is it
Georgia
profitable?
is a one thing.
Is it?
Thank you very much.
Is it profitable down there? Is that why they're growing corn? Or is this everything else is so unprofitable?
No, we talked about that, and it was yes. It's the second thing you said. The alternatives are so terrible that corn is the least terrible thing. The idea on irrigated ground, it was going to take around, imagine this, $5 is about break even on the crop done on irrigated ground. So
break even, $5.
Break even, yeah. Which they're not far away from it at current bids, honestly. So
yeah, because their basis is through the roof, right?
No, not really.
Not when they know
it's
everything's
normal.
that they're
20
having a
over
huge,
the SEP, but that'll be dropping
because of a
hard
huge crop, right?
anytime now. Yeah, so I was actually talking to a guy today down there, and one of the poultry buyers down there had split. I hadn't heard this before, but their harvest usually is August. They'll start corn harvest in August, but the buyer already has a first half, last half July bid. First half July is 95 over July. Last half July is 95 over SEP. And there's a 32-cent inversion to SEP.
Yeah.
But full August is like 50 over. So
Yeah.
the SEP. So you can see what the bids are doing coming down to it. And the takeaway from the meeting was a lot of these end users are all but booked up for harvest delivery right now. So then it's going to be Katie bar the door on what the basis does.
Right. Because they don't really have
The downside, in case anyone's
Right.
watching and thinks that means it's going up.
Because they don't really have the infrastructure to handle this size of crop.
No, absolutely
and it
not.
wouldn't make sense for them to, because usually they don't have this many
Right.
acres,
Right.
and they probably won't in future years like
Right.
this. It's just
So
kind of a
we have a
perfect
lot of
storm.
our elevator customers are adding space, or whether it's permanent upright space, getting baggers,
Yeah.
things like that, trying to find places to lease. It's planted, it's starting to mark rows, but it's a long ways from being made. But if it does, it's just going to be a logistics nightmare, which is a good nightmare to have. It's better than the alternative of not having anything to move.
Have guys, are they bidding a normal new crop basis, or are they already pretty low?
They are, but everybody's waiting for someone else to take the first
Yeah.
drop. They honestly, where the bids are at, they need to be, closer to even the SEP or
Yeah.
even unders. But
Yeah.
no one's buying anything right now, so no one wants
That's
to
the
just drop
classic.
it when nothing's happening, and then people's like, look at this b-hole dropping his bid.
Yeah.
I know, so no one wants to be that guy.
Right.
But they'll all be that guy as soon as we get a little rally.
Yeah, as soon
this
as the first
summer.
person starts selling, they're going to
It'll
drop
happen,
it.
Yeah.
Yeah.
So
Because that gets tricky. You got to, if you get a bunch of targets in, which I don't know if they do yet or not, but if you get a bunch of targets in at your posted basis, and then they all fill real quick before you can drop your basis, that can be a
Speaking
bit
of
nightmare.
targets and that, so did I tell you about this? This is a brand new thing.
I don't know because you
It
haven't told me
was
what it
to
is.
me when I heard it. It was great. So we were in a meeting. This was in Pennsylvania, I think,
Okay.
and we had some of our New York customers in there, and we were talking about getting your farmers to put target orders in, talking about grain origination in general.
Mm-hmm.
And the guy goes, it's a little different, how we do targets. And I said, how's that? He goes, well, we make them set the basis, and they put a target on the futures. I go, that is different, but it's better. And I love it. It's a basis contract. You just make sure they put a target for the futures on it when they do it. That's their target order.
Oh,
It's
wow.
a basis only contract
You
with
set the
the target for the futures. He goes, that way we don't have to go back and change it. We've got ownership already. It's done. It's less confusing. I go, that's perfect.
Yeah.
That is phenomenal.
Most years is good. So, but here's where I push you back. That year, like you're talking about in Georgia, everybody knows basis is going to be really low. Like a lot of years like that where you do have a big crop, and you don't always see it coming like maybe they do down there, but you have not much space. We got a big crop coming, and in those years for the elevator, that can be your worst basis you buy. You buy is the forward contract stuff, but so that, I mean, you just have to manage it well, and
But if you got a
sure you got
chance, I
sales
think
on and
over
stuff.
time, if you got the chance to own basis ahead of time, you do it. I think people do that. Basis could be lower, but if it's basis only, you don't have to worry about margin calls for a while.
Well, that's for sure.
So there's some kind of trade off there, and it just forces you to think. If that happens, then where does my basis really need to be? Am I bidding what I really should be? So
Absolutely.
take some of your medicine and see where you're at. The other thing, not necessarily down there, but just in general through the customer base, and we might have talked about this last time, I don't remember, but there's been a big upsurge in the bushels committed to averaging contracts.
Yeah.
So, and the big thing is you hear the term averaging contract or an averager contract or whatever the name they come by. It's not that it makes you an average marketer. Let's put that out of the way first, because that's not what it means. It means that you're getting an average of a price over a certain period of time. So the best contracts out there are very simple. They cover a very small window, maybe 6 to 8 weeks, maybe May and June. For sure end of June, and you just one day a week sell. Some places they roll enough bushels where they sell every day of the week in that time frame. Whatever it is, at the end of it, you come out with an average price. Typically, a lot of times, and the goal is to come out with a better price than had the person waited till harvest to sell.
Sure.
Last year was a huge example of that, and I think the proof that it worked last year. Again, we're always doing stuff this year the way we should have done last year, right? For better or worse. But what it seems to be this year with the guys that took farmers that took advantage of the averager contract last year, saw that it worked, wanted to do more of it, and then told their neighbors, and they're doing more. So we're seeing a big growth in these, and it may change next year. It may go back to nothing next year. Who knows if it ticks up higher at harvest this year. But right now, where we sit at, there's a lot more that's happening. And it's great because it's kind of it's a one decision process, right?
Mm-hmm.
I don't have to decide what, as a producer, where to put all my target levels in it. I just need to, how many bushels am I going to commit to this thing? And then the averaging program does the rest, sells once a week for 8 weeks, whatever it is. It's pretty easy to do. Guys typically 5 to 15% of their production. Maybe some will do a little more than that this year, but it's just one piece of it. You do that, and then you pair it with some other targets for the summertime, and try to be sold up to your APH before harvest, and see where the chips land at harvest.
Mm-hmm.
So there has been a surge in that. That's not to say demand, but interest in that, and people actually taking advantage of it this year. For sure in the South, which is where we don't really see these a lot, but we're starting to see them pick up around the South and Southeast, the deficit markets.
So let me run this by you. An averager contract, but you just tack on an extra 30 cents on it from the get-go, and if it goes to a certain level, you get twice as many bushels, and a certain level, you don't get any bushels. What do you think?
I don't think that's an averager contract.
Okay. Well, I think that's you say averager contract. It should be, yes, I agree. Those are simple. They're straightforward. They're selling it at a good time, traditionally, seasonally, when the market should be up, And I think those are good enough contracts. But there are other types of contracts that do give you an average, but also have a bunch of options.
You don't know
that
what you
go
got
into
sold
it,
until
and
it's
all-
over.
It's
This one is, you
it
know,
gets
the amount
wonky.
you're selling and going into it as
Yeah.
a producer. I'm committing 15% of my expected production in it. I won't sell any more or any less than that in this program. I know
Yeah.
exactly what I'm getting
Yes,
volume-wise.
exactly. Yeah, and you know your risk. It's
Right.
all very transparent. Versus there's a lot of stuff where it's just like it feels good because boy, I get a little extra. That sounds fun. But then there's
Your
a lot of
extra's
risk
fine.
you're taking on. You don't realize. In a lot of
Everybody
cases.
knows if you just want to make money in the grain business, if you just really are in it just to make money, you just sell calls. That's what I've been told on Twitter.
Yeah,
That's all you do.
Simple enough.
And you can only do it if you're in the grain business.
Mm-hmm.
Because people out of the grain business don't know anything
They
about
shouldn't be
grains.
allowed
They
to.
can't do it. They're not allowed to do it.
Yeah.
But that's what I've been told is how you should do things.
Well, thank
Look,
goodness
you
for the
can't make money
education.
by buying stuff, Jason. You can only make money by selling stuff.
Okay. I didn't know this.
That's what the Twitter says or did say.
Nice. Well, I think that's good. A lot of averagers this year for sure, and yeah, it's because they've had a couple years where they've been
Yeah, we're good.
they've been about as good as as anybody's done, and all that. I think the best thing to do is figure out what's good and profitable for you at this time of year. We're kind of ahead of the seasonal time where market should go up, and sell the number because you like the number and average your contract. Good, commit to it, but you don't know what it's going to be. It could be a great number. It could be just an okay number. You don't really know,
Right.
but you're committed to it. During a traditionally stronger price
Which
time.
is no different mentally than just not selling anything until harvest. I'm committed to this.
Yeah,
I don't
you're
know what I'm
committed to that
getting,
time.
but I'm
a
committed to
good
not
point.
selling until
Yeah.
I get here. There's no difference.
That's right. But anyways, the best case scenario would be selling it because this is a price that I like and makes me money, and which that I also like that only happens before harvest. Like pretty much. I mean, got after harvest, nobody's thinking about what was my cost of production and what is it now that time has passed and I've paid these fees or I haven't gotten the paid back my loan yet and paid more interest. Nobody's thinking about that after harvest. So the target contract allows you to do it at a price that, hey, this is a price that'll make me money. It's good. I'm gonna be in good shape selling this. Whereas an averager contract, not there's no guarantees it's even
Right.
a profitable number.
Right.
So but the great thing people love about it is other people are doing it too.
Oh, right. That's
The
just
power of peer pressure. We
That's
make
it.
fun
And
of
you don't
kids,
even
but
have to
that's what it is.
say, who it is or what they're doing. You just got to say other people are doing this thing, and all over it.
Many people are doing these things.
I've been told. I will say this to the guys down there, the elevators down there, that they're very concerned and cognizant of how the customer relationship, their customer relationships can be put to the test this season, because not only are their typical customers growing more corn this year than normal, they got guys that maybe have done all cotton for years, haven't grown corn in 10 years, maybe coming back into it. There's a bunch of new corn farmers looking for homes for stuff. And, I've run an elevator. You know what's tempting to do? Be like, I'll handle it. I want to be everybody's friend. I'll do it. Guess what? If I'm taking in some new person's crop and my old guys are sitting out there waiting and then be like, oh, we're full. You know what? This guy that came here today, he may grow cotton again next year.
Yeah.
He's gone. My other guys, So that's huge on people's mind. How are we going to take care of our customers? How are we going to get them dumped? How are we going to save them? So a lot of people are already at the point like, look, we're only handling grain from people that we've bought corn from the last 2 years or whatever the number is, just to take care of those guys. And, I get it. You want to reward, have there is loyalty in the elevator business. People like to think there's not, but it happens. And because it's you can't just plan for this year. If it was just for this year, it'd be an easy decision. But it's like, we got to plan for next year and the year after and keep this relationship going and convince these guys that we're going to be here for them. And, especially these places that are investing a lot of money in new bins and handling systems. We know if government programs change, this corn acre's going to go away quick next year, and then it's back to this other stuff. So anyway, there is that is on a lot of people's mind, and I would imagine that is similar in other parts of the country too, where generally elevators want to take care of their customers. They want repeat business. So how do you do that? You take care of your customer in whatever way you can, whatever way the market allows. But that's a huge concern.
Yeah. Yeah, I mean, it's a commodity business.
And it's
not a value add, so you got to be
and the
taking care of people.
the idea
Good
that
service.
the thing people are feeling terrible about is like, man, prices already suck. Basis is going to get even suckier, and I've got to drop it. I just don't want to kick these guys when they're down. But and I'm sure there's people listening right now be like, yeah, all right, those guys are full of crap. But I'm just saying, maybe if that's the case where you're at, tell your elevator guy to give Jason a call. He'll go and set him straight and how he needs to treat you guys. Right? You did that. But it is true. It's this idea of, because a lot of these guys farm themselves, They have elevators and they farm as well. And no one wants to be in this position. But the writing is kind of on the wall. If there's not a time period in the summer where seasonally we have a rally, the guys don't take advantage of these rallies and sell, they're liable to get double whammied at harvest with low board price and historically low basis, at least in the Southeast, in the South this year. Yeah. Maybe other places. I don't know.
Yeah, probably other places too. Yeah, I guess it depends on the growing season and lots of things. But yeah, I mean, your Corn Belt is more, equipped with the infrastructure to handle it without the basis tanking.
And the other thing that the elevators take on the chin a lot of times is that they'll have contracts on with these end users, say for harvest delivery. So right now, if there's a lot more corn grown, well, the elevator's probably got his same set of space. He's got the end users got their same set of space and usage. Their farm's got their same set of space. Maybe they've added a little bit, but if you grow a 200 bushel crop typically, and now you've got a 240 bushel crop, guess where those other 40 bushels are growing? They're coming to town. They got nowhere else to go. Well, now as the elevator, I've got to find a home for these other bushels. So the only way to do that is to get sales on ahead of time at these end users. Well, guess what happens when, harvest hits and you've got these contracts on because you've made a commitment to get these sales on and try to turn and burn and keep space for your farmers is not every end user, but a lot of them is pretty notorious. What happens at harvest to the guys that have contracts, which is mostly commercials, when guys show up spot selling stuff at the low of the market season at end users, I'll go ahead and dump that. And then they call the elevators, I want to push, you're going to bring 2 loads this week or push this contract back a week or two. That happens all the time. More so after harvest, I think, when there's rallies and they're buying a bunch and they're like, hey, you got a contract, when you push it down a little bit. That's all right as long as you're paid to do it or get paid to do it.
That's happened a lot this year.
Exactly. But it's going to happen at harvest too. It always does. So, there's a lot of headwinds when it comes to that. Just this, you're trying to compress a year's worth of customer service into just a handful of weeks, and that's your make or break time as the elevator. I mean that's it. So that's what people remember. So anyway, appreciate what they're trying to do to keep things flowing and keep harvest going good. The biggest thing will be if there's a quick, fast, dry harvest. Oh man, it's going to be rough.
Yeah.
On all fronts, logistics, basis, everything. So
yeah,
we'll see.
Yeah, and hopefully we have export markets by then.
What are those?
Or that could be fun to have in our world. So, anyways, but yeah, you're my foremost authority on tariffs. You've taught me a lot.
The only thing I know about tariffs is that I've learned about tariffs this year is how to spell them correctly.
Oh yeah,
1 R, 2 Fs. Write that down.
Okay. Let's see.
Not tarif, not tar-if.
Tariffs. There we go. So,
but I don't even know that that's the biggest. Not
hopefully
corn
everyone's
anyway.
learned
Beans
that.
Probably, but
the
bigger issue I think, and this has been coming from, a lot of email outreach alerts, if you will, from NGFA, has been this Section 301 issue, which. Again, I'm not the expert on this, but it's essentially has to do with the U.S. Trade Representative and their authorities to do different things affecting trade. And one of them is the administration is floating around this idea of wanting to disallow any Chinese-owned, flagged, or built ships from carrying our stuff, which sounds like it makes sense, right? We don't want, communist ships here doing things, right? Because they've only been doing it for 50 years. But anyway, we don't want to do it anymore. But the problem is, that's like 98% of the world's fleet.
Yeah.
I mean, I think I'm off by a few percentage points. Maybe it's 96.
Right, but even
it's
built,
a lot.
even if it was built, even if it's owned by an American, but it was built by China.
Right, if it's built or any components, how deep do they go into this? And for U.S., I think something like 2% of the ships we use are actually U.S. ships. It's very small. And, you can blame whatever, and it doesn't matter. Here's where we're at. But if this thing hits and goes into effect, tariffs aren't going to matter squat compared to what this could do to the cost of exports. And our good friend Susan, she had one of her graphics one time on her Noble information where it showed one of the small Handy Max ships with corn, what that would add if this 301 went in with what they would charge to it and everything, and it was like, I forget how many bushels of corn it held, but it was like another 70 or 80 cents a bushel cost to haul the same stuff just because it's on the wrong ship.
Yeah, and that doesn't even include the tariffs that might hit too. It's pretty fun.
Crazy.
See, Roger, now you're my resource on this sort of stuff because
No.
you've cut out social media, so for the time being, so you're having to read real things, not just short tweets.
No, this is actually from you and me and Susan's group text.
Well, I'm saying you're out there, you're getting the information one way or another, and it's more long form.
I'm more
probably.
burying my head in the sand. I don't really know what's going on. Been listening to a lot of podcasts about nuclear war, though.
All right.
And
Is
Jesus,
it coming?
And yeah,
All right.
probably. Have you read that book, The Nuclear Scenario?
I've heard, but you told me about it. Yeah.
If you don't want to sleep at night for a while, I suggest that. It's just, we're such bumbling idiots as humans. It's unbelievable how much bumbling we could do.
No argument here.
I know, that's right. Who can argue that?
Yeah. So, one thing, we'll shift gears a little bit here. Switch topics here. Unless you had something, clip that.
That's
we got Randy here clipping for us.
Speaking of switching gears, one of the greatest moments ever in the history of sitting in front of a PowerPoint presentation. I was the person sitting in front of the PowerPoint presentation. The person putting on the PowerPoint presentation was this guy, Jason Wheeler. And I don't even know what the presentation was about. I'm sure it was awesome and great. But the best part was he said, now we're going to shift gears. And on the screen, you had pictures of Richard Gere changing.
And I switched them from one side of the screen. They flipped to the other side.
Phenomenal.
We switched gears.
It was unbelievable.
That was a beauty. I used to go to really try to, I used to think I was funny or try to be funny, and in a professional meeting setting, brutal.
Mm-hmm.
Nobody laughs, but they say those who can't entertain others entertain themselves, which I think is what this is all about.
I thought that was about academics and they can't do, but they can teach or something.
Yeah, it's similar, right?
Oh, okay.
We're teaching because
we're doing.
Yeah.
I do teach.
Speaking of teaching, I'm glad you brought that up, Roger. Good segue. I want to talk a little bit about spread. So we've, in some of our very early episodes, which was 100 years ago or something.
This is talking about grape and strawberry?
What?
Spreads.
Oh, okay, yeah. Yeah, mayonnaise and ranch.
What do you spread ranch on?
I mean, anything.
What?
Are you from the Midwest
ranch?
or aren't you?
You spread ranch.
Absolutely.
You don't dip it?
I mean, you dump a little out on the bread, you spread it around.
No one spreads ranch.
Have you not heard of a chicken bacon ranch sandwich? It's ranch is the spread.
No, someone has squirted it on there. No one is spreading ranch. I'll die on this hill.
If it's in a little puddle, you put it on, we spread it a little bit, right? Smash it in there and you rub it in. It's good. Ranch,
Hand me that ranch knife, kids.
This is our sponsor this episode is ranch. But anyways, all right. So anyways, spreads, yes. But when I'm talking about how merchandisers use them and spreads like in the futures market. Have you heard of these? Seen this? Have you heard
Future
about this?
spreads? Oh, yeah.
Yeah.
Once or twice.
So in our early episodes, we would like to try to explain.
We had a
things.
reason.
We were trying to be educational. Now we just we're old now.
We had a reason for existence.
Part of it is you're old. Like when you get old, you think like, I know some things. I need to let people know about it.
It's usually better
let
that way.
me tell you about these China ships. Am I right? And so we just go. We talk about stuff that we're interested in, which is
and it
great.
may or may not be true or relevant.
Hey man, this is
our podcast. Our name's on it. See?
Hey, look, if it gets bad, you just dial it up to 2 times speed and you just get through this thing, We sound like a Pentecostal church, but it'll be fine. And anyways, so my point is we like to talk about I guess foundational things of merchandising, and spreads is a big one that grain merchants use.
A big one.
Is it? Spreads is?
Nope. Spreads are.
All right. We got live grammar checks going on here.
That's for Phil. I know he's listening. He quality checks all these before they go out, so I know he's listening.
Yeah. I mean, who needs AI when you got Roger here live grammar checking? This is beautiful.
My wife says she calls AI IA.
Oh, yeah? Intelligence artificially. Oh, all right.
That's for Hanson if he's listening.
Yeah. Okay, so anyways, spreads. They are, of course, the difference in prices between 2 futures months.
Mm-hmm.
And so for a grain elevator that's carrying grain, they capture carries. And you hear people talk about capturing carries. What does that mean? That's spread related, right? So I'll throw it to you. How do they do that, I guess?
You need a net to catch it.
Okay, right.
So if you're going to capture
our bottles of
something,
ranch.
you got to get a
Being
net.
thrown.
Well, look, even if you don't want to carry grain, you logistically have to. If you have a normal-sized crop in about any part of the country,
Mhm.
unless you've got enough bin space or storage space or pile space to hold every single bit of it, some people are blessed like that. Most aren't. You have to carry it at some point. You got some point you're going to carry. You can't get rid of everything at harvest. Is what I'm trying to say. I said it backwards, but you got to get rid of some, but you got to carry some, just logistically. So if you buy beans at harvest versus the Nove futures, you buy in your harvest October and you get all these beans. Well, day 1 in November, you're trading Jan futures. Everybody's bidding off that. So you have to have some amount of Nove Jan if you bought beans versus November.
Right.
Forward contracts are going into harvest.
They can't just be on storage. You have to have bought them and them and hedged.
It's
so
owned,
elevators,
it's hedged inventory.
right? We talk about elevators
Or
being,
contracts, hedged
being
contracts.
price neutral,
Yeah.
using the futures just to hedge what you've done in the cash market. So if you've bought them and you've hedged them, because as time goes on, you have to get to the different futures month.
Right.
And so for the merchandiser, it helps if the next futures month is higher than the
deferred
one
is high.
before.
Yeah, at a
And
higher
which
level.
is what they call a carry.
Right.
And
And
so
you want that to pay you as much what it costs you your interest. So beans
Right.
that cost you 7 to 8 cents a bushel a month.
Mm-hmm.
So Nove Jan's a 2-month spread,
Right.
right? So you would like at least a 14 or 15 cent carry to cover your interest costs. Now, that doesn't mean you couldn't set it at 10 if you had to. There's a lot of years you have to take bean spreads below the cost of interest, but you just got to do it. You got to do the best you can because you're going to be carrying stuff out there because you can't sell everything versus the same month you bought it against.
Mm-hmm.
You just can't. And even the people that do the direct hedging, say you bought all your harvest beans versus the Jan already, you're adjusting for that spread in your basis, or you should be. At some point, it has a function. It falls out of your bottom net margin at some point.
Mm-hmm. So that's the merchandise. So that are buying, filling up their grain bins, and carrying it forward. This is one of the few, or maybe only, industries in the world where you can actually the market kind of finances your position for you.
Right, your cost of ownership is cheaper over time.
Yeah. So like Roger said, the bigger the carry, the better, obviously, for the grain elevator that's bought the bushel. So a lot of a lot of elevators that don't do a great job buying the bushels, and maybe they just put it all on storage. Carries are in the market. Do they help them? They don't really help them if you don't have a position to move forward. You're not picking up carries. So a lot of people see, ooh, there's a lot of big carries this year, so I guess elevators did well. That's probably true
If they owned it.
But it's not always true.
Right.
And so that's how the elevators use it, is they capture that carry. So when you move your hedge from, like Roger was saying, November to January, if you owned the beans at 50 under November and there's a 20-cent carry to Jan, now you own it at 70 under Jan. So that's how it's used. I guess you don't just get a check in the mail from the Board of Trade that says, here's 20 cents for hedging your beans with us. This is your reward.
Yeah, it all comes out in your mark-to-market account.
Right. So that's how the elevator captures it, and it helps them. And then as carries, if they get smaller, they're paying less than cost to carry. Then you're like, does it really pay to carry?
Sell it sooner
and all that. Yeah. So the spreads are very important to the merchandiser, because you can look at the futures market anytime, see all the different months, and say, well, when is the market bearing for me to? Is that the way to say it?
I like market bears.
For me to
I've heard of
for
them.
me to hold this, how long should I be looking at holding it, and all that, and then you got to, of course, logistics. Cash flow and logistics always comes into play. But hey, I've got to move 12 million bushels through my elevator, and I can only move 2 million bushels a month. Well, even if the carries don't go that far out, I still have to keep
math
going.
Involved, yeah.
So that like you're saying, you kind of build into your bid, or with talking with buyers about those deferred months. Say, hey, because of the market structure, can I get this sort of number out here and to cover me to carry it for you, and all that stuff. But anyway, spreads are a huge factor that we have no control over what they are in any given day as a merchandiser, but we do have control over setting them when they're
taking them off the table. And they trade as their own
us,
separate instrument. You don't have to
Correct.
go and wait for November beans to be here and Jan beans to here to leg into it. They trade they're their own separate instruments. You trade it and you set targets just like a farmer sets the target on what he wants to sell. There's no difference. And the thing about them is you can set them anytime. You don't have to own stuff first. You don't have to have stuff sold first. It's just if the market's giving you the opportunity to lock in a set of spreads you like, you can take it off. Take it off the board. And one of the reasons we talk about it is because there's hardly ever a time where when you buy it, when you sell it, when you spread it happen concurrently, even within the same month, let alone the same day. So those pieces almost have to be managed separately just by the nature of what makes different pieces move, So, we do try to encourage people to set what we call pre-spreads. You can set them before. It's just any time before roll, right? Before roll day, when they work. And you think about how that impacts your ability to merchandise as you want to. If it's a year where you're in a deficit market, which just means you're not an I state, you're somewhere in the fringe, high usage, low production, and you have a huge crop. That's great. We want to handle a huge crop. We don't know where we're going to put it all. Huge crop. And the spreads are at decent-sized carries because the whole country is expected to have a big crop. You probably want to set some.
So that's what drives carries is large amounts of production.
It's a supply thing for sure. So you've got this. I know I can't get rid of all that harvest, and I've got to carry it because I can only haul so much. I've got to carry it for 8 or 9, 10 months after harvest. The danger for you of not taking spreads is the Midwest has a fluke of something happening, like a 2012. And they burn up, or one county in Iowa burns up and everybody loses their mind. And spreads go away. The carries go away. Now they're flat or inverted. Well, if I'm still out here and I've got this huge crop, now I didn't set my spreads and now there's no carry, man, I'm about to take a bloodbath on a whole bunch of bushels. I hope I can get my end users to help. But guess what? Their end users are in the same market where this big crop is. They don't need to pay up for anything. They don't have to.
Right.
That's not a great position to be in. So pre-spreading, that's maybe a worst case scenario, but it is a very defensive posture to take
agree,
for
yeah.
your merchandise to allow you to have flexibility in your merchandising. If you set them and the spreads go away, now you can decide, well, I can carry them, or if I can get rid of them sooner, I will. That gives me two options. But if you don't, you got to do whatever the market gives you at roll day.
Especially like those for the logistics reasons. Okay, hey, if the spreads go away, I'll just sell it, right? And that's fine. But if I need to move 12 million bushels and I can only move 2 a month,
Right.
guess what? I'm gonna have to be rolling into inverses. So, like you said, it's a perfect defensive thing that elevators should be doing ahead of time,
Yes.
at least on a respectable portion that you're gonna have to carry no matter what. You want to have that protection, and then if it all goes away, you're protected from it. And if it all goes away and you don't have a crop, well, I don't have anything to carry. Well, now it went in your your favor in that case. So that's fine to take off.
There is another side of the coin. There's years where you set them and then you don't use them.
Mm-hmm.
You didn't get them bought as soon as you thought, and this happened a couple of years ago
Yep,
for a
it
lot
did.
of people. And then you got to take them off. Well, if the carry went against you, now you got to eat that difference. So it does have. There is just like Ford contracting for farmers works 8 out of 10 years, but those other 2, if you'd waited till harvest, you got somewhat of a better price.
Yep.
Same
And
way
those
with
years-
free spreading on merchandising.
In those years where it goes against you, it's typically not a huge amount.
It's less than
versus the years
you
where
miss it.
you've protected
Yes.
yourself.
Yeah. And the spreads are seasonal, so you get into the finishing up planting season for corn, so May-ish, you tend to see pretty decent carries or the start of decent carries in corn that work. What happens is when you get into the June-July timeframe, when futures rally, carries go away because we're rallying. It's just the nature of the volume and how the market structure responds. Anyway, carries go away. What happens is, as a merchandiser, you're buying a bunch of bushels in the rally, and you look like, I got all these, I got to get these things. I can't take them all, harvest and send them. I got to move them out to the market in May and July.
What if
and
the
then you
spread
look at the
keeps going
spreads,
away?
and it's flat now, and you're like, I got to take whatever I can. Well, if we have a decent-sized crop in the U.S., what happens by August is those spreads come back
Right.
when all the stuff tones down. And that's also when futures tone down because, we made a crop, made it through pollination, and then they come back. And you see that or maybe some better levels as we get into September. But usually by that time, that's usually about as good as it gets. It can pick up a penny or two or something going into the November roll. But usually it has a seasonality. And so part of being proactive is if the market gives you ability to set some spreads, more than 100% interest carry in April, May, you do it. Even if you don't have much bought yet, because if we have summer rallies, you're going to buy it and you're going to be glad you had it because it'll help you sleep a little better until we get back to the end of summer where you can get more carries locked in again on a typical production year.
Yeah, agree. So that's a great discussion on on why merchandisers need carries, how they look at carries, and like you said, how to evaluate them in terms of cost of carry. And there's a limit to carries.
Mm-hmm.
They can there's a financial arbitrage thing behind it where if it gets to the point where a proctologist in San Francisco can
The grain mafia won't allow it.
own grain and then in delivered space, redeliver it, pay all the fees and interest, and still come out ahead, they'll just do that. So there's a maximum amount it can be, and there's a lot of math and university professors that can tell you exactly what that is. But anyways, the point is there's a cap to it. The flip side is, so the opposite of a carry would be an inverse, which is when the nearby month is higher than the deferred month. So a lot of time we see that in summer. That's what we're seeing this summer.
It's backward dated.
Okay. Whatever.
There you go.
I love it. And so anyways, we see that sometimes, and that's a big signal to a elevator. One, any ownership I have, I want to make sure I've sold before. Because that I'm going to eat that. Whatever that inverse is a penalty. Plus, I'm still going to be paying interest on top of that. So it's a big red flag that you see coming. It's like the hurricanes are out there. We got a couple weeks, man. It's out there in the grain market. You see it for months coming. So a lot of times,
like the July SEP corn inversion right now, right?
Right.
It's coming.
it's been popping around between 30 and 40 cents, and everybody knows it's out there and all that. So, so you want to get out of the way of it for sure. And then the other side of that, there are some years where there's just hardly no carry, maybe the first roll, and then it's inverted all the whole year.
For sure.
And a lot of people say, well, how could an elevator make money in those years? Because elevators fill up with a bunch of grain and carry it. That's what they do. I agree. And if there's no carry in the market, they're going to be in trouble. So a couple of ways. One, like Roger was saying earlier, if you're proactive and setting carries when they're presenting themselves ahead of time well enough,
Yeah, you're covered.
You're
You're
going to
fine.
be protected from that and be okay. You'll be able to carry stuff. The other side is being aggressive sellers and shorting the basis, which is a little more in depth than we're going to
right.
get into today. But it is an opportunity. Is
Well,
my
the best
point.
guys
Yeah.
do both of those things. They'll set spreads ahead of time at carries.
Mm-hmm.
Then if it inverts, then at harvesting they do all they can to sell the stuff soon, take advantage of basis numbers, and then take the spreads off. Take the carries off. So I mean, it just gives you a lot of flexibility. But ultimately, your merchandising is dictated by what the market's telling you to do, and you hear that. And what does that mean? Mostly, when someone says, "I'm doing what the market tells me to do," they're specifically referencing spread structure in the market,
Right.
future spread structure.
Yeah.
As a merchandiser, I can look at that and say, "Oh, this is telling me I need to carry corn from this period to this period," or this tells me I need to sell and then buy it in later.
Yeah.
That is what people say when they say, "What's the market telling me to do?" It's not futures direction. It's not even basis level necessarily. It's what is the spread structure out there right now.
Yeah, and the big thing is, I will say, for a merchandiser, is not. It's what are the spreads right now? That's what it's telling me. It's not what do I think spreads will do.
Yeah,
Right. That's a danger you can
it's a
get
prediction,
into.
right?
Because in the end, it's like no one really knows, and it's based on a lot of things we don't know right now, and
So
that's
this
not
circles
the
back. It's kind of like the tariffs. No one really knows what's going on.
the business year. Is it ranch? Is it 1R? I don't. No one knows. 1R and ranch though.
I do
think.
know there's 1R in range.
Okay, good.
Can agree.
But
Can confirm.
all right. But anyways, yeah, the spread structure is just it should be taken at face value at each moment by the merchandiser and not like a get. Ooh, it's short, but man, it should be this and it should be that. So
I mean, you can do that.
I need to put it.
But
The reason
it's not the easiest way to
tempting-
live life.
Well, one is you got to think about what your business is. A lot of times, like, what is it that we do? Roger, what do we do? But you should think
Today?
like, is my business guessing what spreads are going to do? And if it is, why do I have all these bins and trucks and employees and stuff? Because I would argue it's not your business. But what your business is to see what it's communicating to you and capture it accordingly. So if there's a big carry, set it and say, hey, the market's asking me to carry grain right now. That's what it's rewarding. I'll do it. I'll accept that. Whatever that spread meant, 30 cents diesel July, I'll accept that and I'll carry grain for the market. And then say you do that this time of year, April, May, and then you get to September and now the Dees July is 0. Well, the market says it needs corn sooner. I will do that for the market. And so you maybe take that spread off and deliver grain earlier. Now in your futures account, it's like, wow, this guy's sharp. He just made 30 cents on a spread. No. I said the market asked me to carry grain. I said I would.
Yeah.
Then the market
You changed plans.
asked me to do something different, and it worked that I could logistically. So I did that, and so you're just evaluating the offers of the market. A lot of guys say, hey, I evaluate the offer from the ethanol plant and the rail facility and all this stuff. I'm just evaluating those each day, which you should, but you also should evaluate how the spread fits into that. So that's I guess what I was saying. But don't look at spreads as a thing you have to predict. You don't have to do that as a merchandiser. You just have to take them when they're available and play some defense and protect your company from
and you're not ever
bad
going to
stuff.
pre-spread 100% accurate what you need at the end anyway. You go off plans. I should buy this amount versus this month. I should get this amount delivered in. And, I should sell this in March. I should sell this in April, May. You're going to be close, but the idea is you're trying to take as much risk off the table when you can, as you can. So, I mean, there's always something to clean up at the end of the roll period. I mean.
Yeah, and like you said, you evaluate it by, hey, is this cover my cost to carry or a little more? Maybe I should just take that, and that's how you're evaluating it. And the other way to make sure you're not just guessing what spread I should do that because this spread's probably going to go away. Probably shouldn't do that, right? But a great way to keep yourself from that is to always take it back to a basis. All right,
Yep.
Dees July, I'm paying 50 under Dees for new crop, and there's a 30-cent carry. That'd give me 80 under July.
Right.
Is 80 under a good number? Then I'm doing it because that's a good number.
As
and
opposed to
that's
saying,
why
I
I'm
think
doing
it'll go to 32. I'm going to wait.
Exactly. Right. It's just like, hey, would that work for my business?
And,
So,
you know, a lot of times you lock in at 30 and it will go to 32.
Mhm.
Big deal.
Yeah.
You know, the guys that will agonize over a penny or two on spreads or chase them or, you know, whatever, you know, not set them waiting on the other penny are a lot of times the same people that will not bat an eye at pushing their bid a nickel to get some bushels bought in. It's like, well, wait a minute. This is all the same pennies, right? It's the same,
Yeah.
going into the same pot here. And you usually tell that to some people that are kind of like, oh, yeah, you're right. It doesn't make sense to be doing that. So what I'm saying is lock in a spread when you can and don't push your bid ever. So,
Yeah. And like and something that's worth saying again, I know I said before, but is whoever owns that space, if there's carry in the market and the market's paying carry, whoever owns that space should get that carry.
Yeah.
So if you're a farmer that delivered to the grain elevator, they don't owe you. They built
Right.
that space, they maintain that space, they run this business to capture that. The market's paying. It's not paying your bushel, it's paying that bin
Right.
Space. If you're a farmer and you have your own space, it's paying you if you should accept it. But to accept it, you have to sell the grain and capture the carry.
Yes.
You can't just say, oh, well, I guess it's going to be 30 cents higher if I just wait till July and do nothing, because it won't be.
Yeah.
Most of the time. So you have to sell the grain and to capture
Yeah.
the carry. So the grain has to be sold to capture the carry. So the grain elevator that has it on storage is not capturing carry.
Right.
They're capturing fees from storage. They're not capturing carry. A grain elevator that's bought it is capturing carry. A farm bin that has sold grain in it, just like a elevator with sold grain in it, can capture the carry. So
And the last thing on the spreads when it comes to that thing, I'll say, selling the carry from a farm standpoint, if you're in June and there's a better price for harvest bushels than nearby, you sell that, you're selling the carry.
that's right.
Doesn't have to be from harvest forward. It's any
Yeah, you don't
right,
have to
right. You
physically
just-
have them in the
yeah.
in the bushel.
So,
in the bin.
you know, again, just throwing that out there, you know, don't get hung up on exactly when it has to happen. So anyway,
Okay. Well, this was good.
Yeah.
We appreciate people listening, following along, and
watching now.
watching on the YouTube. Other than Randy, I guess there's other people that might watch this other than that guy over there.
Doubt it.
Okay. All right. Well, it was a pleasure as always, Roger. Till next time. As always, thanks for downloading and listening. And if you haven't already, please subscribe to the podcast and share it with folks you know in the business.
And if you'd like to reach out anytime about anything at all or have any show ideas, you can always find us on Twitter at ElevatorsCut. Follow us there, tweet at us, DM us, and we'll always respond.
Till next time, for Roger, I'm Jason.
For Jason, I'm Roger.
Thanks for listening to The Elevator's Cut.
Out.